Many people ask me how to make 100x, 500x in crypto. Personally, I've been able to do it myself. So in this video, I want to tell you guys how that is possible, but more importantly, how to create a diversified portfolio so that you can make a lot of money, but more importantly, so you don't lose a lot of money. Because the step number one in investments in any market is to not lose money. Don't lose money. That's the step number one. As long as you have a portfolio that keeps you from losing money, now we can focus on making these crazy gains like 100x and 500x. So let me show you exactly in this video how I do this with my portfolio myself. The first mistake that some crypto traders do is that they buy only one coin. Now, if you buy only one coin, then your risk is massive because that one coin is very, very dependent on the public sentiment or development from the team and the community behind that project and just a bunch of other factors. Building a balanced crypto portfolio is key and can help guard against excessive losses since some projects will outperform others. And if some projects goes to zero or close to zero, then at least you don't lose all your money if you hold some other cryptos as well. So diversification is very, very important. So over the next few minutes here, I'm going to show you what a cryptocurrency portfolio is and the tools that you should be using to keep track of your crypto portfolio. So first of all, what is a portfolio? Basically, it's a basket of many different cryptocurrencies that make together this portfolio. And crypto investors should aim to improve their risk-adjusted returns by mixing and diversifying their cryptocurrency portfolio and token investments. So for many beginners, investing in crypto means buying and holding Bitcoin. But did you know that there are actually over 20,000 cryptos out there? So of course you should have Bitcoin in your portfolio. That's step number one for every single investor in the world. But should you hold only Bitcoin? Well, you're gonna be safe. It's gonna be the most secure. Like Bitcoin is never going to zero. But are you gonna make millions and billions? Maybe, yeah. But I still would consider a diversified portfolio. I hold the vast majority of my crypto in Bitcoin, but not everything is in Bitcoin. I have multiple other cryptocurrencies in my portfolio. So the good thing is that the top 5 largest valued cryptocurrencies make up 76% of all the cryptocurrency value. The vast number of cryptos available speaks to the potential future of crypto. But before we dig into the methods of building your portfolio, we should talk about the benefits of what a crypto portfolio can deliver. So first of all, of course, if you invest in one of the smaller cryptos that belong to the 24% of the cryptocurrency value, which is thousands and thousands of cryptos, you have a chance to make 100x your investment, maybe even 500x. And I tell that from experience because I have made investments that made me between 50 to 500x, which is absolutely crazy. Can you make 500x on Bitcoin today? I think probably no. Maybe 100x, maybe 50x on Bitcoin. But if you want to make 500x, you need to go to a smaller cap coin because they have more potential runway to the upside. But it should also be said, of course, the risk is vastly higher as well. So you could lose all your money. Now, the importance of a balanced portfolio with diversification cannot be understated. So most beginning crypto investors, they think buying crypto means just holding Bitcoin in hopes of it going up to $1 million per coin. While I believe that's going to happen, I think Bitcoin is going to 1 million. You can become wealthy way faster than waiting for this to happen because buying Bitcoin is a great place to start because it's the best crypto in the world and it's less volatile than the others. But diversification will help you here. So the benefit of having a few other eggs in your basket is that one of your investments might outperform all the others. It is quite easy to find a coin that can outperform Bitcoin over a given time frame. But it should be said that in a bear market, this coin could very easily underperform Bitcoin very quickly and you might be better off just holding Bitcoin. But if you're somehow managing your portfolio correctly, then you can beat the market. And that's what all the stockbrokers and real estate brokers and crypto traders in the world want. They want to outperform the market. So Bitcoin is the best crypto in the world, but maybe there's going to be other cryptos out there that might do very well in the next 5 years. So you should definitely do your own research. And I made a video about the top 10 layer 1 blockchains that should be in your portfolio. You should go watch that video, because in that video I give you a small breakdown of the top 10 list of the biggest layer 1 crypto projects out there. They all have a coin, and yeah, just go and watch that video, link down below, and it's also on my channel. But let's go into the steps that applies to literally any portfolio out there. Step number 1 is that you need to be doing dollar cost averaging. Let's say you want to take $10,000 and put it into crypto right now. You should not put everything in today. You should also not take 10,000 and just put it in tomorrow or even next week. Instead, you take $10,000 and you break it up in smaller increments, and you buy, let's say, $500 per week, or $1,000 every 2 weeks, or even $100 per day. It doesn't really matter how you break it up. What matters is that you do break it up and that you keep to your strategy and you don't change it. And this applies to any cryptocurrency, and it also applies to Bitcoin. Why? Well, it's because if you buy today with 10,000 and then tomorrow Bitcoin goes down 30%, then you just lost $3,000 and you don't have any money to buy the dip. So you cannot buy the dip, and you always want to be able to buy the dip. Better to dollar cost average, because if it goes down, you can buy more. If it goes up, you're already in. This leaves you the headache of timing the market, because this video is actually not about trading. This video is about investing. If you want to learn more about trading, I would suggest you go and watch my Bybit tutorials. I have them over on my channel. I also have a Binance tutorial, and there's a playlist below this video about how to trade Bitcoin. I will leave that below. You can watch that. But this video is for investors. So dollar cost averaging saves you the headache of not having to time the market and basically avoiding trading, because trading is something that most people lose money from because it's very hard. Probably 90% of you are better off investing rather than trading. That's just based on my own experience. Personally, I am a trader, but I'm also an investor. So I feel like I'm qualified to tell you what I believe is true here. Now, step number 2 is to develop a strategic exit strategy. So every good plan and intro needs an exit, right? We need an exit strategy, how to take profits. So science tells us that whenever our trades are winning, dopamine is released from our brains, making us feel good and euphoric about our decisions. This means that our exit plan will just go out the window, because this good feeling and euphoria will make us stick to this position, thinking that if we made 10x, we might as well make another 50x, or if we're at 500x, maybe it's going to go 1000x. But that's greed, and we have to somehow understand that no one ever got poor from taking profits. Taking profits is very, very important. Now, more gains lead to more dopamine, and more dopamine causes us to hold out the trade longer than we maybe should. So then the market collapses and you hope it's going to bounce back, but at the end of the day, all of a sudden you become a trader rather than an investor. As an investor, if you are in big profits, you take profits. Not all of it, you don't sell everything, but you take partial profits. And here comes the dollar cost average in again. All right, I told you about dollar cost averaging in. That exact strategy applies on dollar cost averaging out. Let's say you put $10,000 into a cryptocurrency and now it's worth $1 million. Good for you. You made 100x. But when you make 100x over a short period of time, now you have to start dollar cost averaging out. You could immediately sell maybe 20% of it if you want. But then I would go into a dollar cost averaging out strategy and selling maybe $10,000 per week or $50,000 based on, just come up with a strategy and stick to that until you have maybe only 30% of your tokens left or 20% of your tokens left. And the 20% or 30% that you keep, you can call this your moon bag, and you can keep that for the next 5-10 years if you want, because you already made all your money back anyways. So it's free money that you're playing with, house money. This is what I do always. I've invested in over 400 crypto startups myself. I've taken insane profits. Some of them I lost, but most of them I made profits on, and I've been able to finalize good exit strategies. And I'm telling you right now, dollar cost averaging out, it's the smartest way to do it. All right, step number 3 is be rational. You know that crypto prices can be extremely extremely volatile with wild swings to both the upside and downside. And additionally, blockchain technology is relatively new technology and truly exciting. However, don't let all of the hype put your emotions into overdrive. I think the number one issue in crypto is not fear of cryptos going down. It's the fear of missing out, which is the biggest issue, the FOMO. This is a major reason why traders fail with portfolio management. Emotions usually lead to buying an asset at high prices only to see a large correction, and then people in pure panic, they take profits at low prices. They're basically doing the opposite of buying low and selling high. Some people, they insist on selling low and buying high. That's the biggest noob mistake you can possibly do. And this is a lot because of FOMO and basically emotions. Be rational. Turn off your emotions. And if you are emotional, I'm telling you right now, you have invested way more money than you should have. Because if you have all of your wealth on the line, of course you're going to be emotional. Even the best trader in the world would. Because if you lose your money, then, well, you're on the street. You cannot feed your family. Emotions have to be cut off, which means that you need to decrease your risk until you can think rationally. This is easier said than done. But I would say the most important thing you can do right now is to subscribe to my YouTube channel, because on a daily basis I upload videos when I talk about investments and trading and how to control your emotions and where and when to exit on different cryptocurrency trades and investments. Step number 4 is to use a crypto portfolio tracker. One of the biggest advantages of the crypto economy is the decentralized nature of many coins. As you build your portfolio, you may have to deal with several different wallets, exchanges, and platforms. Definitely the best exchange that you should choose to build your portfolio on is Bybit. That's the one that I'm using, where you can have easy access to your portfolio, where you can buy crypto assets paying low fees, and you can still get $30,000 in bonus if you use my link below this video. So this is something that is crazy, guys. If you click my link to Bybit below this video, then you will get up to $30,000 in bonus to your account. This is because I have a great relationship with them. I've been using them for over 4 years, and I've negotiated a great bonus for you. So if you already have a Bybit account, no worries. Create a new account with my link and you get this bonus, and then you will also continue to get some bonuses and gifts in the future because you signed up with my link. And below this video you have my Binance link. You get $1,000 if you click my Binance link below this video. And it should be said that it is always a risk keeping your money in an exchange. If you wanna keep some of your money outside of exchanges, I would suggest you buy a Ledger hardware wallet. It's a cold storage wallet. It's the safest ways to store your crypto. I have a link down below to Ledger. I would suggest you use my affiliate link. It supports the channel. Thank you so much, guys, for that. Besides this, it can be hard to manage your portfolio across all of these wallets. If you have some on Bybit, you have some on Binance, some on a Ledger hardware wallet. So that's why you need a crypto portfolio tracker. So there are many different trackers out there, but let me give a small little step-by-step guide here. So step number 1, determine what convenience the tracker provides and what problems it will solve for you before you choose one. Step number 2 is to look into the app's safety and security. Many crypto portfolio trackers link to crypto exchanges, and it's crucial to protect your coins. Step number 3, practice makes perfect. Many trackers offer free trials so you can play around with them for a while. Step number 4, look for a simple, clean, and clear layout. You don't want to spend a lot of time trying to figure out how to use your portfolio tracker. An intuitive design will help make it easier for you to manage your crypto portfolio. So now that you know what to look for, here are some trackers that you could take a look at. You have CoinStats, CoinTracker, Coin Market Manager, Coin Market Cap, CoinGecko, and so on. All right, let's go into step number 5, diversifying your portfolio. A good portfolio management strategy includes diversifying your investments. You've heard the saying about not putting all of your money in one coin, because if one fails, you don't want to lose all your money. So there's a lot of hype in crypto, up and down, back and forth, you know. So some coins have very big hype for some time, but then the hype dies and basically you might have made the wrong decision on that coin. If you put all your money in that coin, then you messed up. Better is to diversify and buy maybe 5 different coins or 10, maybe even 20. I wouldn't suggest doing much more than that because you also have to somehow understand what you're buying, right? Of course, I've invested in 400 startups, but I have over 120 employees globally, out of which at least a handful of them are devoted to only my wealth management and my investments. I have a head of investments, so I have a huge team. So you cannot really compare me with just the average crypto investor. So for the average crypto investor, I would say 5 to 20 coins or tokens is more than enough in your portfolio, and it's diversification enough. You don't have to buy 100. So I would probably do the following. 50% of your portfolio, in my opinion, should always be Bitcoin. Bitcoin you can almost see as a safe haven, as a store of wealth. It's almost like a stable coin in a way. You put your money there, you know it's gonna be there. And you can put this on a cold storage, or you can also put it on Bybit or Binance if you want to. But maybe better to put your Bitcoin on this cold storage. And then 30% of your portfolio you put in high cap coins. And I would suggest you go and watch my video about the top 10 layer 1 blockchains to invest in, because these are high caps that are not gonna go to zero most likely. These are coins that have stood the test of time. You're probably not gonna make 500x on them, but you're also very likely to not lose your money on it. And then the remaining 20% of your portfolio, you can go with higher risk, where you can buy low caps or ultra low caps. And if you want me to give you some recommendations on good low caps and ultra low caps where you can make 500x your investment or more, subscribe right now, because that video is coming up very soon, and press the notification bell below this video right now. But basically 20% of your portfolio could consist of these higher risk investments, and then you have a balanced portfolio. 50% Bitcoin, 30% mid caps or high caps like Ethereum, etc., and then 20% very high risk investments where you could make 500x and you could lose all your money, but it's fine because most of your portfolio consists of these investments that will be there for the next 5, 10, maybe even 50 years. Make sure to subscribe right now, and if you enjoy these videos where I go through some interesting topics like these, make sure to leave a comment down below about good topics for future videos like these. I'm gonna make these high quality videos for you guys because I love you guys, and I will leave some good links down below for different exchanges you can use. All the exchanges, the links below this video will give you a sign up bonus so that you can try the exchanges. These are affiliate links, and if you haven't seen the video, which is right now popping up right here, then click it right now, and I will see you guys over there. Bye bye.